Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. Today we are going to put spotlight on top mutual fund performance, the returns that have been in last 1 and 3 years. And of course, returns are not the only thing that we see in a mutual fund performance, but there's been some interesting data. Let's talk about that now. Quant Small Cap Fund that has been shining. It has outperformed its peers in the small cap category in the last 3 years with 36% returns, while Nippon Small Cap has closely followed it with 35% return. Franklin Smaller Companies comes next on the list, and that has also done well with 33% returns. The list will come up for you on the screen as well. Let's go to mid-caps now, because now Motilal Oswal Mid-Cap Fund is the star performer here in the last 3 years with 37% returns. Quant is again in this category, has delivered 36% returns in this one. And if we talk about the Flexi Cap now, JM Flexi Cap and Quant Flexi Caps are the top performers in the space, while Parag Flexi Cap fares better with 22% returns, and this is a fund that everyone wants to understand and talk about as well. Summing it up with large caps, wherein we have Nippon India Large Cap clocking in 25% returns, JM Large Cap comes next with 23% returns. What is the point of this exercise? We want to analyze individual mutual funds to make sense for you whether it's a good time to invest here, because we've been seeing a lot of volatility, but which is the particular fund and what are the characteristics and what is the fund manager profile looking like, and generally how have they performed in up and down markets, what explains the fund's performance and more. We have with us two experts on the show today, Udayan Adhye, the founder at Udayan on Money, and Prableen Bajpai, the founder at Finfix Research and Analytics, joining us now. Thank you so much for joining us today on the show. And usually we have very specific queries, so we thought let's make it more specific and try and understand more about individual mutual funds for the benefit of our viewers as well. So Prableen, let me start with you. Let's take the small cap category performance and let's talk about the funds that you think are decent enough in the list that we've just shared. There are two of them that you have given us. One is the Bandhan Small Cap Fund, and the second is the Nippon Small Cap Fund. Can you talk about both of them individually?
Good afternoon, Sonal. Great to be on the show. And first of all, congratulations for featuring in the top 40 under 40 list as a young achiever. Okay, yes, the two small caps. I was curious to understand, of course, Nippon is one of the largest schemes in the space. And it's got a huge AUM, and it yet continues to deliver great performance. And the scheme was launched, Sonal, in the year 2010. So it's a fairly old scheme in terms of rolling returns as well as trailing returns, SIP returns. The scheme has been in the top 3 performers mostly. The approach here is to have a very diversified portfolio with over 250 stocks because it's a huge AUM that now they manage, although they have certain restrictions on the inflows. It's interesting to see how the fund is positioned in terms of its assets in the large, mid and small cap space. So they hold about 15 and 12% in the small cap and large cap space with about 73% purely in the small cap. Sorry, 15 and 12 in the mid and the large cap space. The top sector allocations here are currently industrial products, electrical equipment. And what we've seen is with the changing cycle, they have changed allocations pretty aggressively. For example, electrical equipment, which is now around 8.5%, was as low as 2.25 and 4.2% a year and 2 years back. So they've made those changes. A very interesting sector, which is chemicals and petrochemicals, they are just about 3.65% there, which was as high at 8.5% around 1.5 years back in their portfolio. So they've been agile. They've been able to manage a very huge AUM. And the fund manager has been managing, Mr. Samir Raj has been managing this since 2017. So, of course, the big AUM is one of the slight negatives here, but I think as the market size is becoming larger and larger, that has been managed beautifully by the fund house. The second one on the list is Bandhan, a small cap. Sonal, I was curious to see because this fund has again performed phenomenally in the recent past. It was launched at a very interesting time of 2022. So they got the benefit of the COVID fall. So I would say the performance in the first 1.5, 2 years was largely due to the right allocations probably, which they got to make during the dips of COVID. And there has been a shift in the fund management. The fund manager underwent a change, and now the CIO of Bandhan is actually managing this fund, Mr. Manish Gadwani, and who was with Nippon and has had experience, for a very, very long time. He's managing this fund. It's again very diversified. It's got over 150 stocks. It's a very small, compact AUM of about 5,000 crores. And it's interesting to see how the allocations within the fund are different from that of the benchmark. So the top 10 stock allocations are kept just about at 30%. So it's nicely diversified, a lot of focus on the quality growth and valuations. So I think this is again a fund which investors can keep their eyes on. But because there has been a change in the management and a new fund manager came in only in January 2023, which has proved great for the fund, I would say that it would require a bit more tracking.
Okay, and it is so important, right? As I was pointing out earlier, it's not just the returns. There are other factors that make up a fund, and that's exactly what we wanted to understand from you. Udayan, let me come to you, because small caps, that has been the talking point in last 1 year. Some talk about maybe the rally will fizzle out, but that is not something that we've seen. What is your view here? What are some of the funds that you would pick out from the list that we shared?
So, Sonal, first of all, thank you so much for having me. Wonderful to be here. And with regards to small caps, right, they have been the buzzword, because if you look at the past 2 calendar years, small caps have returned the highest amongst other categories in terms of market cap. So now, keeping that in mind, whenever there's euphoria in a particular category, you want to approach it with safety. And that is also in many ways how I want to analyze mutual funds and how I have been analyzing mutual funds. So the couple of funds that I would specifically look at in this category are, I look at the Nippon India Small Cap Fund. I think that is something that we've already spoken about. But what attracts me towards it, apart from everything else that has been mentioned, is that it has a very low down market capture ratio. So it's at 49 currently, and the up market capture ratio is 139. So what are these capture ratios, right? When, let's say, one particular index goes up by 100%, how much of that 100% has been captured by that particular fund? And similarly, when it's going down, how much of that downside has been enjoyed or guarded by that mutual fund? So ideally, you want the down capture to be low and the up capture to be high, which is exactly what is happening with Nippon India Small Cap. So the ratio, that is the key here. Generally, a ratio of about 1.4, 1.5 is supposed to be very good. For Nippon India Small Cap, it is 2.86%, which is fantastic, especially in the small cap category. So I think that becomes very essential, because the downside risk, if you capture it, when the markets start recovering, you're recovering from a higher point. So it obviously helps you out in that aspect. And the second fund, which I am looking at, which is a slightly left field choice, is the Invesco India Small Cap Fund. Now, one of the reasons I am specifically also again looking at Invesco India Small Cap is because a relatively new fund, about 6 years old, launched in 2018. And if you remember 2018 was the time when mid and small caps started taking a beating. So it has gone through that entire cycle, right? When it wasn't in a category that was doing well, and the last 3-4 years since the COVID crash, that category has done well and funds in those categories have done well. So the Invesco India Small Cap has an AUM that is relatively smaller compared to heavyweights like Nippon India Small Cap Fund, an AUM of under 4,000 crores. And once again, if you look at the capture ratios, the down market capture ratio, which I think becomes very, very critical for the small cap category, is about 67%, and the up market is 131%. So very similar to Nippon India Small Cap in that category. And then the capture ratios are very close to 1.96% currently. So apart from that, you also have the CIO, Mr. Tahir Bacha, who's a very reputable investor, has got a wonderful pedigree that comes along with his name. He's personally looking into this fund, and that just adds confidence to whoever is investing in it. So I think that small AUM relatively, plus the market capture ratios, plus Mr. Bacha himself being involved in this, those are the factors that really draw me to this fund right now.
Thank you also for explaining these ratios to us. Capture ratio, up market capture ratio, down market capture ratio, not something that we use so often. But Udayan, just a follow-up, now that we are talking to you, coming to mid-caps, you have one fund that you've liked out of the list, that is Motilal Oswal Mid-Cap Fund, that has delivered 37% returns in last 3 years. What is your view on this one, the overall performance of mid-cap funds? But of course, specifically, this one is what I would like to know.
So mid-caps are at a very interesting juncture, because if you plot mid-caps against large caps, if you look at the ratio, that is the highest it has ever been. So generally, when ratios are high, that again, there's no one magic formula, but when ratios are high, that is a category that you want to be careful about. So with regards to the Motilal Oswal small cap fund, once again, I keep highlighting this right now, which is the down market capture ratio of 48%. And that again becomes vital because when a particular category starts heating up, you want to make sure that your downside is protected. And this fund has done that very, very well. And it's also had a fantastic rolling return, which I believe is much, much more important and much, much more effective than simply calculating absolute returns. Because with rolling returns, you're looking at point-to-point returns, right? So let's say, for example, you're looking at rolling returns for the past 6 years and you're looking at 3-year average rolling returns. So for every 3-year date, so let's say from 1st January 2016 to 1st January 2019, what are the returns looking like? 2nd January 16 to 2nd January 2019, how are the returns looking like? So they give you a very good idea as to how consistent a particular fund has been. And that is what, again, drew me to the Motilal Oswal mid-cap fund. Comes with a solid management as well, solid research team. That's what Motilal Oswal is known for. Just one thing that I would like to specifically highlight here, right, is that obviously none of these are recommendations. Do your own due diligence. But at the same time, while we're talking about mid and small caps, which have tended to perform well over longer periods of time, at times like these, when markets have run up, it's important to go back to the basics, which is focus on asset allocation, focus on rebalancing, which are not at all the attractive things to talk about, which no one really likes to say that, okay, I sold some of my small cap because I wanted to rebalance my portfolio. But I think at times like this, what is not popular in terms of investment and investing practice becomes the critical part, because these small practices really set you up for longer gains, sustainable gains in the future.
I think that's a different conversation, a different episode that we have to do on this one, Udayan. Asset allocation and also when to, reallocate your portfolio or sell some part of your portfolio as well. Prableen, I want to come to you on the mid-caps because I think everything has performed well. Mid-caps were the flavor, right? What do you pick from the list?
Sonal, I think because we're discussing small caps and mid caps, I think a word of caution here that investors first shouldn't expect the same returns that they've seen in the last 3 to 4 years. And also, I think a staggered approach at this stage is much better. Looking at a STP or SIP lump sum should be avoided. And in the mid cap category, I have picked one mid cap. I wanted to see how this fund has been doing, understand the philosophy. It's interesting. They pick stocks, which are placed at different stages of the business cycle. So they are looking at growth as well as trying to bring in stability at the same time. It's got about 71% in the mid cap with almost 25% in the large caps currently. So I think, again, an attempt to bring more stability and keep the liquidity intact for the portfolio. It's a nice 7,000 odd crore AUM. And it's headed by Mr. Ankit Pandey, not by Mr. Tandon, actually. And the top holdings, of course, it's a concentrated portfolio, as the fund house has about 60% allocation to the top 10 stocks. What is interesting is how they differ from the index, because it's been really hard to beat the mid-cap index. Just about 5 to 6 schemes on a rolling return basis will have beaten the index over the last 5 years to 10 years. And for example, PSUs, they almost have an allocation of 30% as compared to roughly 13% in the index. So the way they have positioned the fund is quite different from the index, and I think that has worked in the favor till now. Current holdings would be, they have Reliance Industries, they have highest allocation to PSUs, they have financial services as the top sector, healthcare. So I think this is one of the funds which investors can look at. And the second one is the Mahindra Manulife Midcap. This fund, again, I think it was interesting because it has been able to beat the index on rolling return basis, launched in 2018. So it's been there for some time now. The approach has been the key, again, how it differs from the index. It's currently overweight on metals, mining, oil and gas, telecom, and underweight on capital goods, IT, reality. The fund manager, Mr. Khandelwal, has managed to bring in a lot of good stocks, timely selections in the portfolio. It's a compact portfolio of just about 2,500 crores of AUM. And I think this is, again, a fund, but slightly more volatile than the standard mid-caps that we've seen. And so again, investors shouldn't take very high allocations, Sonal, to funds which have performed very well in the recent past. They must do their due diligence and go slow in these two segments, mid caps and small caps.
Of course, and this is a word of caution from both our experts. Whenever you're investing in any small and mid-cap funds, it's very important to do your own due diligence, and very important to be very aware whenever you're investing in this segment. We have to take a quick break, but on the other side, we'll continue our discussion and continue analyzing individual funds for your benefit. Stay tuned for that. Welcome back. You're still tuned into MF Corner. We still have with us Udayan and Prableen Bajpai. We are talking about strong MF performers or strong returns from some of the mutual funds, and we're analyzing individual ones on that. And one on my list that everyone talks about is Parag Parikh Flexi Cap Fund. So let me come to you first up, Udayan, because you take that name and everyone's like, oh, it is the best fund, you must invest. It has performed well, of course, over a longer period of time as well. But what is your view on this particular fund? First up, if someone's starting fresh, should they still invest in Parag Parikh Flexi Cap Fund?
So when someone's investing for the first time, everyone wants to know which fund to invest in, because that is the question, that's the $1 million question, right? But at the same time, I'm sure Prableen, also has the conversations with her clients that where to invest becomes the last question. So if it's a first-time investor, you want to first understand what are your goals? Do you want this money in the next 1, 2, 3 years? If yes, then an equity fund, whether it's the Parag Parikh Flexi Cap or any other equity fund, becomes not the ideal place to park money, because equities are obviously volatile in the short run. Now, let's say someone wants to invest for the long term, right? And they still want to perhaps talk about and invest in the Parag Parikh Flexi Cap, because it's literally the talk of the town. Everyone you speak to around you perhaps owns the Parag Parikh Flexi Cap or one of the Parag Parikh funds. And it's performed, again, 25, 26% 3-year average rolling returns, which is, again, fantastic. And what is unique about it, which, again, has helped it perform well over the long run, is it has an international exposure. And because it keeps the international exposure to a certain amount, then the taxation becomes favorable. You're not taxed as per international taxation, you're taxed as per Indian tax laws. So that is something that has helped it diversify a bit. There's this big question that everyone again asks, is Parag Parikh a glorified multi-asset fund? Because it has all these different, it holds all these different kinds of stocks, different regions it's investing in. So once again, what I like about this particular fund is that at times, when you're investing, there are different funds that perform well at different times. And what helps you stay invested is your confidence in a particular fund house or a fund manager. So with Rajiv Thakkar, he's become this, again, legend in the Indian investing space. Even if the fund at times does not perform well, which there was a small instance a couple of years ago with the Parag Parikh Flexi Cap, because there is so much trust in the fund house and the fund manager, it just helps you stay invested. So purely from that perspective, again, it helps you ride the downturns, it helps you stay invested for longer. And that's one of the reasons, again, I like this fund, because it just becomes easier to stay invested. And the best investment is the one that helps you stay invested, even when it's not going in your favor as much. So that's why it becomes one of the go-to funds for me.
Okay, interesting answer there. So the best fund is where it helps you stay invested. Prableen, what is your take? Do you agree with Udayan? And do you think somebody who's starting out now, Parag Parikh Flexi Cap Fund, the famous fund, is still the place to go to? And is there anything else in the Flexi Cap category?
Parag Parikh, there's a line written on their website, we value investing. So, and it's so true. That has been the foundation of the fund. Sonal, current allocation is very interesting. They have, of course, about 70% in equities, Indian equities. They're holding about 14% outside India. And they're holding 14% in debt money markets. And I think that's the amount, they can actually deploy if in case some opportunities arise. So in terms of their transparency, I think it's a 10 on 10. In terms of their approach, they pick companies which are low debt, which have high cash flows. And again, they mentioned this, that they're looking for companies which have which are investor friendly. So not only it's investor friendly AMC, but I think they're also looking at companies which are very transparent. So transparency at both levels. So definitely it can be an addition for a new investor, and Flexi Caps is a good space, but it's broadly large cap tilted. So you have to be sure that though you're investing in a Flexi Cap, it's not one of the Flexi Caps which is very agile and which will move into mid caps and small caps. The other fund I would like to talk about here is JM Flexi Cap. Again, the spectacular performance sometimes sort of brings you to study the fund, because you should see why the fund has outperforms. And I think JM's reason has been its agility in terms of holding the right proportion of large, mid and small caps. Even now they're holding about 42% in large caps and 19% in mid caps, with 37% in small caps. So they've been very agile. Despite of being a flexi cap, and they can probably have a higher allocation, the top 10 sectoral allocation is just around 25 to 30%. So the concentration risk is not there, Sonal. And this is again a fund house, which is, a scheme which is actually managed by the CIO of the fund house, which is Mr. Satish Ramanathan, who moved, he has been with the Sundaram managing their select Midcap and then Franklin. So he has a spectacular track record. I think this can be one of the funds which investors can definitely keep on their radars.
Okay, all right. So Parag Parikh Flexi Cap Fund and GM Flexi Cap Fund, these are the two funds from the Flexi Cap category that Prableen likes. I cannot discuss large caps now because of paucity of time, but both of you have liked ICICI Pru Blue Chip Growth Fund in this category. And this has been an outperformer for a long period of time. And as per Udayan's data, the up market capture ratio is 122% and down market capture ratio is around 78%. And the capture ratio is 1.56%. So these are the new terms as well that we learned today. But thank you so much for joining us today, Udayan and Prableen. Always a pleasure speaking with the two of you. And, it's very important to analyze individual funds because, as you all have been pointing out, we have discussed on the show umpteen number of times, it's just not the returns, the pedigree of the management. And as Udayan mentioned, that keeps you comfortable. You can stay invested even when you're not comfortable for a long period of time. And the other points that Prableen mentioned as well. So thank you so much. And we'll speak to you very soon again.
Thank you so much.
Okay, all right. With that, we'll take your leave on this edition of MF Corner today. But stay tuned for Closing Bell to take you through the last hour of trade.